Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting it down to the closing bell, here to help take us beyond the bell. It's a global simulcast with Massar and Tim Stenovec. Welcome to our audiences across our Bloomberg properties, an audience that, of course, was glued to that TV screen at 2 p.m. Eastern Time. 2 p.m. Eastern Time that, I don't know, was a little bit of a letdown.
I know. I feel like I agree. It was a little bit of a ho-hum. I mean, Tim, because I feel like if you look at markets, we're pretty much where we were, maybe even a little bit firmer on the equity side of things, but pretty much where we were prior to the decision.
Yeah, I mean, look, 99% was priced in at 99% level that this would happen. It was what Brian Jacobson, chief economist over at Annex Wealth Management, called a hesitant hike. But Romaine, what did you want to see?
Well,
from
I think it was the communication and the guidance. No communication in that statement other than what we've had before. And the press conference was just him basically dodging questions, failing to go out on a limb and tell the market about anything that might come next. And I think this gets to the idea, Scarlett, we were just speaking with Andrew Levin about this idea of, quote, unanimity. I'm putting up my quotation marks here.
Yeah.
There's clearly not unanimity there. And I would rather them be a little bit more transparent about it.
The vigorous debate that we all have in the markets should be something that's reflected in what happens inside the Federal Reserve. I think you're looking for conviction,
where's Jim
and there was no
Bullard
conviction.
and his bicycle when you need him, Scarlett?
You know what? We just have to wait, and I'm sure he'll have plenty to say later on. But it did feel like a choose-your-own-adventure kind of press conference where you can read whatever you want into what he said.
He did tell us wait 3 weeks. Wait 3 weeks until the minutes come out, right?
Well, we got a lot coming up. I mean, 3 weeks till the minutes come out. You have Jackson Hole, August 24th through 26th. You got the next Fed meeting on September 20th. And, of course, quite a bit of economic data in between with two big critical labor market reports and at least two critical inflation reports in there as well. Meanwhile, the S&P 500 is going to finish the day little change. The NASDAQ composite going to finish the day down about 0.1%. The Dow Jones Industrial Average, well, having a pretty good day. 13 straight days of gains, up about 0.2%, a 13-day win streak that matches its longest win streak since its inception more than a century ago. The outperformer, though, on the day belongs to two other indices. The Russell 2000 up 0.7%, and Dow Transports up almost 3%.
Yeah, the world is in love, at least investors, it seems like, with the Dow Jones Industrial Average. Also, if you're looking for some outperformance today, check this out, the KBW Bank Index, which is always interesting to watch on a Fed day. And when we're talking about interest rates, it certainly plays into what banks can charge on their accounts, also what they're getting on loans. But KBW Bank Index, guys, up about 1.9% today.
All right, let's take a look at the industry groups and industry decliners and advancers, because we have a pretty much unchanged market for the S&P 500. But at the top, the best performers here are some railroad companies, Union Pacific leading the transportation index higher, media, entertainment, and banks doing well in addition. And of course, banks have been the big drivers of the Dow's 13-day advance as well. On the downside, software and services, that's Microsoft. Semiconductor companies, that's Texas Instruments. All those on the results just reported.
All right, real quickly, let's get to some of the individual gainers as we wait for those earnings. Alphabet, top of the NASDAQ 100 and S&P 500, up about 5.6%. You know the numbers. We did it yesterday after the close, reporting second quarter results that beat expectations. So the ad business, a lot of analysts weighing in, saying that it does seem to be recovering. Cloud unit benefiting from the rising demand of AI. The Gap, this was there were two stories that had to do with CEOs. Gap getting a new CEO. Thank you, Mattel, because the Mattel president and COO, Richard Dixon, was named as Gap's next CEO. And you did see the Gap show some outperformance, up about 7.7%. Dixon was really key in giving some new life, if you will, to Barbie when it was struggling as a toy a few years ago. Union Pacific, Scarlett mentioned it, number one in the S&P 500. Headline early this morning, it is tapping its chief operating officer to be its new CEO. We're talking about Jim Vena, excuse me if I mispronounce. This is a company that's been grappling with slowing freight demand and facing some pressures to improve its service. And then PacWest, it lost about 27% yesterday, gained it back today. And this is, of course, as it was being bought by its smaller rival, Bank of California.
All right, I'm here with some of the decliners. Scarlett did a great job summarizing these when you looked at the moving groups earlier. Microsoft down 3.7% on the day today. As you mentioned, it's all because of earnings. Shares falling after the company gave a forecast that showed a continued slowdown in Azure cloud services business. Interestingly enough, Romaine, what you ended up hearing from analysts as a result of of these earnings was, hey, show me, the magic with the AI. We didn't see that, according to the analysts, when it came to those earnings yesterday. Texas Instruments.
What if there is no magic, Tim? What happens then?
Then there will be a lot of disappointed investors.
Don't say that.
There has to be
magic.
There has to be magic. Not magic today for Texas Instruments. Worst day in 9 months. Go back to February of 2022, down 5.4%. Company gave a weak forecast for the current quarter. And then Snap, finished the day down 14.2%. It could have been worse, I guess you could say. It was down as much as 20% yesterday after those numbers came out. Revenue outlook came in lower than the lower end, on the lower end of analyst estimates, Romaine.
All right, a quick check of yields before we get to some of the earnings that are set to cross the wire any time now. Typical knee-jerk reaction that we saw right off of the 2 p.m. release of the Fed statement. And as is typical, once Jay Powell started speaking, a lot of those moves reversed. The net result of it were yields, at least on the short end of the curve, moving slightly lower on the day by about 4 basis points on your 2-year yield, 7 basis points on the 5-year yield. The moves were a little bit less dramatic on the longer end of the curve and a slight uptick in yields on your 30-year.
I really wondered, what did we come away with from the Federal Reserve? What was your takeaway?
I think this is the inflection point. It's clear that there is a serious debate here about the effects of their rate hikes so far, whether it's appropriate to end those rate hikes. And obviously, at least based on what the staff submitted, still some concerns here about economic conditions, even though they did revise out those recession expectations.
I got to say, I think what was interesting is that they don't see, Jay Powell says that the Fed does not see that inflation gets back to 2% till at least about 2025. And I just think that lengthens the runway. That was very definitive. If we're wondering how much higher for longer, I felt like he gave us a little bit of a timeline there.
Right, so that means maybe all of next year we're going to see rates above 5%. We won't see.
But at the same
Fed
time, they're not
rates.
going to continue to raise rates until we get to 2%. So at what point do they make that judgment? And there's no rule book on this, right? It's just we'll know it when we see it.
Continue to assess.
Yeah, continue to assess. Yeah, great. How many sort of catchphrases can we pull out of that here? I think we are getting some earnings of crossing the wire. We're expecting Meta, Mattel, Western Union, and quite a few others. Let's start here with Meta Platforms. Those earnings crossing the wire right now. Here's your headline number coming in right now on Meta Platforms. In the second quarter, we're looking at monthly active users on Facebook of about 3 billion. That's basically in line with analyst estimates. EPS coming in at $2.98 versus $2.46 on a year-over-year basis. Revenue in the quarter coming in at about $31.5 billion. That's a slight beat than what the street was looking for here. And their guidance going forward for the third quarter, they're looking at $32 billion to $34.5 billion. That's the range that they're giving. The low end of that range at $32 billion is above the average of street estimates, guys. So at least the knee-jerk response here appears shares up on the back of what looks to be a beat on some of the key metrics.
Well, Alphabet's results boded pretty well for Meta, and especially when you consider that advertising makes up almost 98% of Meta's revenue. So as much as they've changed their company focus, the company name to the metaverse, that's really not a big part of the company at all.
I think what's interesting is, and analysts wanted to watch for any ramping up of costs and metaverse investments. Two things. And if you take a look at their expenses here, fiscal year total expenses of $88 billion to $91 billion. They had seen 86 to 90 billion. So it does look like, a total expenses range of 88 to 91. It does look like maybe they're upping that up a little bit. And so maybe they're going to have to answer some questions as to why, because they've been cutting a lot of workers, about, I think, a quarter of their workforce.
I mean, it turns out if you cut a quarter of your workforce,
there are costs
your
involved.
Costs do go down. One thing I do want to point to in Meta's press release here is what Mark Zuckerberg said. He said, and this is to your point, Scarlett, we had a good quarter. We continue to see strong engagement across our apps, and we have the most exciting roadmap I've seen in a while with Llama 2. I actually don't know what that one is.
One second, guys. Before we move on here, I just want to point out, just to your cost issue here, Carol, that you were raising, they're basically saying that their Reality Labs operating losses are set to increase meaningfully in 2024. And that outlook, according to them, includes about $4 billion of restructuring costs.
So they're explaining it, right?
It goes back to that idea that this is the year of efficiency as well, that they are going to take all the costs that they need to do right now and really put themselves in a position to be leaner so that when the pickup comes, they're ready, that will be amplified.
All right. Meta moving in the after hours, guys, up about 7%. More earnings to come. I know you guys are going to be breaking it down, and we are too on this side. So we're going to call it a wrap, at least for the cross-platform, but more listen to TV, radio, our YouTube channel, as well as streaming, because we've got more to break down. And we will see you again, same time, same place tomorrow.